Dear all, a very good evening to all of you. I am Kajal Wahi and I welcome all our attendees today to the analysis on the recommendation of 52nd GST Council meeting. And for this, we have with us eminent speaker and author and a past president of ICI, CA Dr. Atul Kumar Gupta sir. I would now like to welcome him on behalf of all the participants and Team Texo. Sir, please welcome.
At the outset, I convey my sincere thanks for the team for organizing this very important and timely update on the 52nd GST Council meeting and giving me this opportunity to participate. Friends, there are around 10-12 changes which I wish to share with you in a very short and crispy manner because we have very few changes which we are looking to discuss. Now, my dear friends, so the first and the foremost change is about the rate of change. My dear friend, as far as the goods are concerned, there is a change in the rate of goods. As far as the millet product. Now, my dear friend, in case there is a food preparation of a millet flour in a powder form, in that case, the chapter which we are talking about is 1901. So if the HSN code is 1901, and in that case, the food is being prepared in a powder form, wherein the more than 70% is millet. In that case, now, if the product is not packed, pre-packed or labeled, then the GST rate will be 0%. And in case it is a pre-packed and the labeled form is there, then the GST rate will be 5%. So I again repeat that in case you are looking for a product, you are dealing in a product which is a millet based, then a powder form with a 70% is millet. In that case, if that is not a pre-packed or pre-labeled, then the 0% GST rate will be there. Otherwise, it will be the 5%. Then, my dear friend, as far as the jari thread is concerned, that the jari thread or the yarn made out of metallized polyester film or the plastic film, falling under the chapter 5605, are covered by the entry for the imitation jari thread of the yarn and will attract the 5% GST rate. My dear friend, so there is another change when we are talking about the jari thread. The jari thread made of a metallized polyester film or a plastic film falling under the chapter 5605 will attract the 5% GST rate, but no refund will be available as far as the inverted duty structure is concerned. So this is the second change which I wish to share with you. Now, my dear friend, you are aware that when we talk about the extra neutral alcohol, you are aware that when we are talking about the alcoholic liquor for the human consumption, there are certain raw material, and one of the raw material is the extra neutral alcohol, ENA. Now, my dear friend, the ENA presently attracts the GST, and by virtue of that, ultimately on the alcohol, the GST is not there. So what is happening that when the alcoholic manufacturers are purchasing the ENA, they have to pay the GST and then the credit is not available. But now onwards, after the introduction of a notification, and there will be a separate HSN code for the ENA as well, that will come out from the GST regime. So practically, it's not the case that we are adding something in the GST regime. We are coming out from the GST regime as far as the ENA is concerned. And then meaning thereby there will be the excise duty and the VAT will be applicable on this ENA with a separate 8-digit code will be there. Yes, when we are talking about the ENA for the industrial use, that will continue to attract the GST at the rate of 18%. Now, my dear friend, as far as the molasses is concerned, you are aware that we are celebrating the year 2023 as a year of molasses. And to reduce, so there is a, I will say, the thrust on the reduction of the rate as far as the molasses is concerned. And now the molasses will attract the rate rather than 28%, it will be 5%. So what will happen that the mills who are dealing with this molasses, there will be more liquidity available to all of them. And this will further reduce the prices for the manufacturing of the cattle feed as well. So now the molasses will attract the rate GST rather than 28%, it will be the 5%. Now, my dear friend, as far as the services are concerned, I just wish to share with you that there is a notification number 12/2017 which deals with the various exemption notifications. That is, the exemption notification deal with the various services. Now, my dear friend, in that there is a clause 3 and 3A, which deals with that when you are providing the services to the certain central government, state government, or a government or a local authorities for the function entrusted under Article 243W or the 243G. In that case, that activity will be exempt. So, in case you are providing any services, say for example, they are maintaining certain urban amenities, and you are providing that kind of a services related to a municipality, that doesn't attract the GST. Now, adding some 10 new services into that, I just wish to share with you that the activity related to the water supply, public health, sanitation, conservation, solid waste management, slum improvement, and upgradation supplied to the government authority will also be exempted. So, my dear friend, there will be new exemptions available, that in case you are providing certain to the governmental authority related to the water supply, public health, sanitation, conservation, solid waste management, in that case, that will not attract the GST. As far as my dear friend, the job work is concerned, that job work, normally you are aware that normally job works attract the GST at the rate of 18%. But now the job work related to conversion of the barley into the malt product, malt will attract the GST at the rate of 5%. So barley to malt will attract the 5% GST as compared to the 18% GST earlier there was. So now this will fall under the category of a food product, processing of the foods. So job work in relation to food or food product will become, and by virtue of that, the 5% GST will be there. My dear friend, in the next change related to the services sector, you are aware that when you are going to Manali or you are going to Uti, you are taking the private operator. Now they have the one bus or the two buses are there with one of the operator. And by virtue of that, they have to take the GST number and do a lot of compliances to ease out the benefit for them. Now, for these kind of operators, the government has introduced the amendment that with effect from the retrospective, that is 1st of January 2022, these bus operators will fall under the electronic commerce operator category as well. Meaning thereby, if the aggregator is there, and the aggregator will take the bus because normally we are booking through the one or the other app. Now the app, say for example, I'm not taking the name of the app, but any app, maybe any A or B app, which is taking the services of the bus operator and then billing to you. So that aggregator will become an electronic commerce operator under section 9 subsection 5, and by virtue of that they will bill to you, and by virtue of that the bus operator will not require to take the registration. Now, my dear friend, the benefit will be available that there will be ease of doing business. They will not require to take the registration because they have only the one or two bus. But at the same time, there will be the large bus operator also. They will have the 20 buses, 50 buses like this. In that case, whether they will, because the ITC benefit will be lost. Because if you are operating through a electronic commerce operator, you will not be able to claim the ITC because you are not registered with the GST department. But at the same time, there will be the guys who are having the 50 buses and they want to go with their own. They want to take their registration. They are not using the ECO, that is the electronic commerce operator. So in that case, that facilitation will be also available, that in case you want to continue as a normal operator without looking for a ECO, then you are there. You are free to use that as well. So this is something new in addition in the section 9 subsection 5 of the CGST Act as far as the electronic commerce operators are concerned. My dear friend, there are the certain district mineral foundation are there set up by the state government. Now these district mineral foundations will be classified as a governmental authority, and by virtue of that, because they are taking certain services, and now these services will be outside the GST ambit, so there will be a benefit available to these district mineral foundation trust operated by the state government. My dear friend, there is a very, very important change which I wish that everybody you should take note of. The next two changes or three changes which I wish to share with you. The first change in that particular category, which is very important, is about the Indian Railway. Now, the Indian Railway, when we are taking the services of Indian Railway, there are certain services which are falling under the reverse charge mechanism. Meaning thereby the buyer has to, the service receiver has to pay the tax rather than the Indian Railway is charging. By virtue of that, what was happening that the Indian Railway was not able to utilize the ITC available to them, and that was becoming a cost. Now the government is going to introduce a mechanism wherein the Indian Railway will be charging for all their services under the forward charge, meaning thereby the Indian Railway will collect and pay to the government, and by virtue of that, not only the Indian Railway will be able to claim the ITC, but at the same time the buyer will not require to do a lot of compliances, and even otherwise, if they are not liable to take the registration, they have to take the registration because they have to pay under the reverse charge. So this will be additional benefit available to the even to the service recipient of the Indian Railway. My dear friend, you are aware that under section 107, we have to file, if we are looking to file an appeal, because there is a show cause notice under section 73, 74. You are aware that when we are talking about the section 73 is a normal period demand, and section 74 deals with the extended period demand. Now there is a show cause notice which is get or adjudicated against the SSC, and the SSC has to file an appeal within a time prescribed under section 107. But what was happening that because of one or the other reason, you forget to file the appeal, and now even if you will file the appeal, that will be rejected because of the time barred. There is a time limit was there, and now it will become a time barred. But now, my dear friend, as per the new amendment which is going to introduce under this 52nd GST Council, that any order which was passed prior to the 31st March, I request to note down by each one of you that any order passed before 31st March 2023, then you can file the appeal up to 31st January 2024. And so this will be a welcome change, welcome amendment, one-time amnesty scheme is there that you can file by 31st of January 2024 for any appeal. The order was passed before 31st of March and you could not file, or even if you have filed but that was rejected as saying that it is a time barred, then you can refile that appeal by 31st of January 2024 with an additional requirement that normally you are required to pay the 10% as a pre-deposit, but now you are required to pay the 12.5% as a pre-deposit, and out of that 12.5%, 2.5% has to be debited from your electronic cash ledger. So my dear friend, rather than paying 10%, now it will be 12.5% under the amnesty scheme for all the appeals which are become time barred because of the non-compliances as given under section 107 of the CGST Act. So my dear friend, this will be amnesty scheme. I request each one of you that you please trace out any appeal which is pending to file or filed but rejected because of the time barred. Now this will be amnesty scheme available which you can use up to 31st of January 2024. My dear friend, then coming to the next change, which is related to the corporate guarantee. You are aware, my dear friends, there are the two types of corporate guarantees which are prevalent in the market. Number one is by the director, and number two, that when the corporate guarantees are provided by the corporate, like a holding company is providing the corporate guarantee to his subsidiary company. My dear friend, as far as the directors are concerned, as being given under the provision under this 52nd GST Council press note, that the corporate guarantee, as the director is giving a corporate guarantee. Now the director is not claiming anything. So as the government envisaged that they are going to issue a circular stating that since the director is not charging anything, director is not a related party, and director is not charging anything from the company, in that case there will not be any there will not be any supply, and it will be outside the ambit of the GST. But my dear friend, as far as the corporate guarantee is concerned, given by the holding company to a subsidiary company or a vice versa, there will be a separate notification which will be issued, and to amend the rule 28 sub rule 2 will be inserted in the valuation rules related to the valuation rule section 15, wherein the corporate guarantee will attract the 1% GST, 1% value. So say for example, the corporate guarantee is for 1,000 crore. In that case, 10 crore will be the amount of a corporate guarantee, and then 18% GST will be there on the same. So my dear friend, this is the something that very, very importantly, we all need to understand that now the actual amount or 1%, whichever is higher, meaning thereby, if you are not charging anything, then there will be a kind of ambiguity that still you have to, but otherwise, as per the deeming provision under rule 28 sub rule 2, when you are dealing with a related party, then the provision says that you have to charge, then the provision will say that the taxability will be on the 1% of the amount of the corporate guarantee or the actual amount, whichever is higher. And the recipient will be liable, eligible to claim the ITC of the same. But there will be a challenge that when the recipient, say for example, the recipient is dealing in the electricity sector or in a coal sector or in a petroleum sector where the GST is not there or their activity is otherwise exempted. In that case, there will be additional burden on the assessees when they are taking the corporate guarantee and they have to pay GST on a notional value as being provided under the amendment. Now, my dear friend, the next one change is in relation to the attachment of the property. You are aware that when the DRC 22 is being issued to attach the property in certain cases, as far as the rule 159 of the CGST rule 2007 is concerned, now there will be automatic vacation. So after 1 year of the attachment, there will be automatic vacation of the attachment of the property, and then for that there will not be any separate order required from the commissioner level. So automatic vacation will be there. So it's a welcome change when you have to chase the authorities to get your vacated, the attachment of the property got vacated. My dear friend, there is a certain ambiguities which are there as far as the place of supply is concerned, as far as the transportation of goods is concerned, then the advertisement service or the co-location service. The government proposed that they will be issuing a circular to clarify certain aspects related to them. So I believe that once the circular will be issued, then only we will be speaking again. Right now, taking a guesswork or giving some kind of a assumption, I will believe that it will be a biasness in either way. So I will not touching upon this, but just to share with you that you keep track on this, that there will be 3 services on which certain circular will be issued as far as the place of supply is concerned. As far as the, my dear friend, the export of services are concerned, you are aware that you have to have a FRC. So foreign remittance certificate is required to be to obtain in case you want to claim that your services are export of services. But at times the money is coming in the INR Vostro account. So my dear friend, whether the INR money received in INR Vostro account will be qualified to be an export, the question is always there. Now, my dear friend, very soon the government is going to issue a circular related to that, giving a clarification that how the INR Vostro account will be qualified to be treated as export of services. So, my dear friend, this will be a very welcome change for the as far as the promoting the export of services or the export of goods for the Indian nationals are concerned, that there will be a benefit available. My dear friend, there are three last changes which I wish to share with you. As far as the SEZ units are concerned, say for example, Mr. X is there and he is providing the certain services or supplying giving a certain supply to the unit or a developer of a SEZ. Now, the point was whether he can charge the IGST and claim the refund. So there was always an ambiguity around that. But now, my dear friend, the government is going to issue amendment in the notification number 1/2023 and enable the facility that in case you are providing any supply to the SEZ unit or a developer, then you can charge the IGST and claim the refund for the same as well. You are aware, my dear friends, that very soon the tribunals will start working as far as the GST is concerned. The government has given certain qualification criteria that if you are an advocate of more than 10-year experience in the working in the tribunal, with a 50 years of age and the maximum age is 70 years. In that case, you can become a member or a president of the tribunal so there will be a kind of a conditions which are being given. My dear friend, as far as the last change is concerned, as this is relation to the ISD, that for the ISD, there was a proposal in the 50th meeting that there will be certain mandatory requirement will be there for the distribution of the ITC in case certain services are taken which are being used for the head office as well as for the branch office. So you can't use that credit into the head office only. You have to have a compulsorily distribution of the credit to your branches. But now that is going to made operational very soon after the introduction of the amendment, which was proposed in the 50th GST Council. So, my dear friend, this was all as far as the 52nd GST amendments, Council amendments are concerned. I covered the amnesty scheme. I just wish to share with you that now you can file the appeal before up to 31st January 2024 of any order issued prior to the 31st of March 2023 with an additional amount of 2.5%. And then the personal guarantee point also covered. I covered that how the corporate guarantee will be level. There will be certain clarification on the place of supply provisions which will be issued by the government. SCZ I covered. ISD mechanism going to be compulsory. Money coming in the INR Vostro account will be eligible for export with the certain amendments which will be issued. And the property attachment, automatic vacation of the property attachment will be there. The qualification criteria for the appointment in the president and the member of the GST appellate tribunal is also being given. And then the certain rate of change for the millet floor, where the 70% is the millet by weight, then the rate will be 0% in case of a non-packed or the non-labeled, but otherwise it will be 5%. The jari thread will attract 5%. Foreign going vessels will also be going with a 5% rate. GST on the molasses will be 5%. Earlier it is 28%. And certain exemptions are there for water supply. And job work related to the barley into the malt will be attracting 5%. The ENA will come out from the GST regime. A separate HSN code will be there. And then the certain services provided to the local authorities will also be exempted. There will be a new e-commerce operator scheme for the you call as this bus operator. And finally, the Indian Railway will be under the forward charge. So these are the few amendments which I wish that all of us should discuss. There is a question from Abhinav ji that does requirement to make 20% through cash ledger here clarify that pre-deposit in other case can be made through credit ledger? My dear friend, there will be many permutation combination. But as far as this 2.5% is concerned, that specifically means that you have to pay through the cash ledger. So Abhinavji, I will not conclude that you can pay through the credit ledger, but just to share with you that this is the additional requirement in this amnesty scheme. Corporate guarantee clarification is prospective clarification, which means old BGs are compliant with the 0% GST. I believe you are right. So all these type of amendments should be always prospective in nature. And even nobody can challenge the contention of the SSC because there was a bona fide belief that the bank guarantees are not taxable. And even you have to see the time of supply for all these cases. So the corporate guarantees may be continuing for the years to years, and the time of supply will decide that whether when it will be actually taxable. So that point also, Abhinavji, you need to take care. ISD registration is about to become mandatory for existing service which continue year after year. It is virtually impossible to get our GST number changed from MNC vendors. How will government allow GST on those existing service order which shall remain on old GST number as vendor like LIC, etc. will not change GST number? So there will be a practical challenge, Abhinavji, as you rightly pointed out, and I believe that why this session, as otherwise also through the various forums, we will submit your concern to the authorities, and maybe some suitable clarifications will be available in this kind of a scenario, which you rightly pointed out. So these were the three questions I received. Vinod Sharma ji, gaming industry, Vinod ji, 52nd GST Council, there is no amendment. Sambha Murthy CR is talking about, can you explain the treatment of distributing the RCM credit received on common service like legal service as the ISD taxpayer cannot make any outward supply? So in case of a reverse charge mechanism, you taken the legal charges, you taken the legal services, and now you have the ITC available. So you have to distribute among your head office and the branch office if that relates to your branch office. If that relates to only to your head office at the management level, then there is no ISD compulsion is there. But in case it is required to be distributed, then as given in the formula that you have to do in a ratio of turnover of their various branches. So that is the formula. Sambha Murthy ji is available under the law. And I believe that you can very well use that formula. That is based on the turnover of each of the branch. You can distribute that credit. Abhishek ji is asking a question. Is it only applicable to holding subsidiary and not between associate? It will be. I just given you an example. So in case there is a corporate guarantee by anybody, it will be like this. Abhishek ji is again asking a question. Secondly, again, bus operator has to pay GST in cash for liability under section 9, subsection 5. So in case you have any ITC is there, you have to pay to the service provider. Say for example, a chartered accountant is charging from a bus operator. You have to pay you have to pay to the chartered accountant. Now, as far as the 9(5) is concerned, by the electronic commerce operator, the electronic commerce operator will collect the tax and pay to the government exchequer in cash only. Yes, you are right. They have to pay in cash only, whatever the amount they will collect. So with this, I believe that I answered all the questions which are being raised by our colleagues here. I believe there is no other question. In case you have any question, I am there for next 2-3 minutes. Otherwise, we can conclude the session. Kajal, I believe that I have answered all the questions, so you can conclude.
With that, we come to the end of this wonderful session today. I hope you all found the session informative and insightful. Also, we have the special webinar on this Wednesday, which is on 11th October.
Kajal,
On when can GST?
I received 3 more questions. So if you allow me, I can.
Sure, sir. Sure.
Lalit Anandji is asking question, is amnesty scheme applicable for export refund also? Any appeal, any rejection order, you can file, Lalitji. A company is a holding company, B company is a subsidiary company, a company given corporate guarantee, who will pay the GST against corporate guarantee? So the holding company will charge and deposit to the government. The question from Samamurthy ji is, RCM is to be paid first for claiming RCM ITC. So can I, yes, RCM has to pay first. Samamurthy ji, you have to pay the RCM first, and then you can distribute to the all the branches. Over to you.
Also, we have the special webinar on this Wednesday, which is on 11th October, on when can GST number be cancelled and how to reactivate it. You will get the participation certificate for the same. For any query, please contact at 9711096808. I just repeat, it's 9711096808. I would now like to thank CA Dr. Atul Kumar Gupta sir for his time today and for sharing his wonderful insights with all of us. It has been an honor and privilege to have you all with us. Thank you so much, sir.
Abhishek ji, if you wish to note down my email ID, is atulservicetax@gmail.com. atulservicetax@gmail.com. Thank you, everybody.
Thank you so much, sir.